Hey, this is BA, and I want to welcome you to the w.d.gann 1909 interview, also known as the ticker interview. And there's a couple reasons why I feel that this is very important. One is it provides deep insight into what Gann was actually doing in his with his systems. And number two, it provides a look at his actual trading record as observed by independent third parties. And that's always important because there's a lot of speculation out there, a lot of people saying this or saying that. Well, let's go back and take a look at the original article that really started it all by this man named w.d.gann that we're about to hear of. Some time ago, the attention of this magazine was attracted by a certain long-haul poll, stock market predictions, which were being made by w.d.gann. In a large number of cases, Mr. Gann gave us, in advance, the exact points at which certain stocks and commodities would sell, together with prices close to the then prevailing figures, which would not be touched. Now, of course, the magazine that they're talking about is the Ticker and Investment Digest, which is where this all appeared in, that I'm reading to you. For instance, when the New York Central was at 131, he predicted that it would sell at 145 before 129. So repeatedly did his figures prove to be accurate, and so different did his work appear from that of any expert whose methods we had examined, that we set about to investigate Mr. Gann and his way of figuring out these predictions, as well as the particular use which he was making of them in the market. The results of this investigation were remarkable in many ways. It appears to be a fact Mr. w.d.gann has developed an entirely new idea as to the principles governing stock market movements. He bases his operations upon certain natural laws which, though existing since the world began, have only in recent years been subjected to the will of man and added to the list of so-called modern discoveries. We have asked Mr. Gann for an outline of his work and have secured some remarkable evidence as to the results obtained therefrom. Now, let's back up and just take a look at that paragraph. These techniques aren't new. They go back to the beginning of time, and that's really what he's saying is since the world began. And it's trickled down, but it's handed down from generation to generation. One example of that is Judah Toro, who was based in New Orleans. And on the New Orleans Cotton Exchange, which was really big at the time that Toro lived, he was noted as never having a losing trade. And he donated all these infirmaries and everything else around the New Orleans area. Okay. Well, he died before w.d.gann was born. Okay. So this actually goes back. It's just with Gann, because of this article, he really caught the attention of a lot of people. Okay. Because this wasn't just some guy claiming things. This was people that went in and investigated him, in that sense, and came out saying this guy's legitimate. All right, let's continue on. We submit this in full recognition of the fact that in Wall Street, a man with a new idea, an idea which violates their traditions and encourages a scientific view of the proposition, is not usually welcomed by the majority for the reason that he stimulates thought and research. These activities the said majority abhors. I mean, come on. I've been in this field for 20 years, and there's guys that come in there, and they don't want to have to do anything. They just want to get rich. Well, buddy, just sit out on your lawn, and we'll get wheelbarrows full of gold coming to your doorstep. I mean, life doesn't work that way. You have to put in research and time in any field or any endeavor that you do. If you don't, you're kidding yourself. Okay. w.d.gann's description of his experience and methods is given herewith. It should be read with recognition of the established fact that Mr. Gann's predictions have proved correct in the large majority of instances. For the past 10 years, I have devoted my entire time and attention to the speculative markets. This is Gann talking now. Like many others, I've lost thousands of dollars and experienced the usual ups and downs incidental to the novice who enters the market without preparatory knowledge of the subject. I soon began to realize that all successful men whether doctors, lawyers, or scientists, devoted years of time to the study and investigation of their particular pursuit or profession before attempting to make any money out of it. Okay? Well, of course. I mean, that's, everyone knows that. If you're going to be a doctor, you don't just show up at a couple of seminars, read a book, and then Thursday you're doing brain surgeries. It doesn't make any sense, man. You got to, it's in life, you have to invest in yourself. You have to invest in yourself, in both time and money, and do what it takes. Anything in this world that's going to be of any consequence to you, it's going to be any, value to you, it's going to take some time and effort. Okay. It's not just going to fall in your lap while you sit there drinking cognac and smoking cigars. Life doesn't work that way. Okay. Being in the brokerage business myself and handling large accounts, this is Gann talking, I had opportunities seldom afforded the ordinary man for studying the cause of success and failure in speculations of others. I found that over 90% of traders who go into the market without knowledge or study usually lose in the end. I soon began to note the periodical reoccurrence of the rise and fall in stocks and commodities. This led me to conclude that natural law was the basis of market movements. I then decided to devote 10 years of my life to the study of natural law as applicable to the speculative markets and to devote my best energies towards making speculation a profitable profession. After exhaustive researches and investigations of the known sciences, I discovered that the law of vibration enabled me to accurately determine the exact points at which stocks and commodities should rise and fall within a given time. The working out of this law determines the cause and predicts the effects long before the street is aware of either. Most speculators can testify to the fact that it is looking at the effect and ignoring the cause that has produced their losses. It is important here to give an adequate idea of the law of vibration. I did that. I tell you, I went a little bit further here. Okay, let's get it back. It is impossible here to give an adequate idea of the law of vibrations as I applied it to the markets. However, the layman may be able to grasp some of the principles when I state that the law of vibration is a fundamental law upon which wireless telegraphy, wireless telephone, and phonographs are based. Without the existence of this law, in the above inventions would have been impossible. In order to test the efficiency of my idea, I have not only put in years of labor in the regular way, but I spent 9 months working night and day in the Astor Library in New York and the British Museum of London, going over the records of stock transactions as far back as 1820. I have incidentally examined the manipulations of Jay Gould, Daniel Drew, Commodore Vanderbilt, and other important manipulators from the time to the present day. I have examined every quotation of Union Pacific prior to and from the time of E.H. Harriman. Mr. Harriman's was the most masterly. The figures show that, whether unconsciously or not, Mr. Harriman worked strictly in accordance with natural laws. In going over the history of markets and the great mass of related statistics, it soon became apparent that certain laws govern the changes and variations in the value of stocks, and that there exists a periodic or cyclical law which is at the back of these movements. Observation has shown that there are regular periods, he's talking about time periods, of intense activity on the exchange followed by periods of inactivity. Okay. Mr. Henry Hall, in his recent book, devoted much space to the cycles of prosperity and depression. Notice he said cycles of prosperity and depression. He didn't say the geometry of prosperity and depression, which he found reoccurring at regular intervals of time. The law which I have applied will not only give these long cycles or swings, but the daily and even hourly, and we'll get to that in a little bit, movements of stocks. By knowing the exact vibration of each individual stock, I was able to determine at what point each will receive support and at what point the greatest resistance is to be met. Those in close touch with the market have noticed the phenomena of ebb and flow, or rise and fall, in the value of stocks. At certain times, a stock will become intensely active, large transactions being made in it, At other times, this same stock will become particularly stationary or inactive with a very small volume of sales. I have found that the law of vibration governs and controls these conditions. I have also found that certain phases of this law govern the rise in a stock, and an entirely different rule operates in the decline. While Union Pacific and other railroad stocks, which made their higher prices in August, were declining, United States Steel Common was steadily advancing. The law of vibration was at work, sending a particular stock on the upward trend, whilst others were trending downward. I have found that in a stock itself exists its harmonic or inharmonious relationship. Note he uses the word harmonic, okay, or inharmonious relationship to the driving power or force behind it. The secret of all its activity is therefore apparent. By my method, I can determine the vibration of each stock, and also by certain time values into consideration, I can in the majority of cases tell exactly what the stock will do under given conditions. Read that again. By taking certain time values. Okay. Everyone, of the thing that's out there, in the Gann world, no one really understands what these time values are. Well, there is time cycles. Okay. Which the time cycles are at the core of the law of vibration, okay? And you take that out of the equation, you can never understand what Gann was doing. That's impossible. You have to first go after and understand his time. And we'll look at kind of examples of that coming up here pretty soon. The power to determine the trend of the market is due to my knowledge of the characteristics of each individual stock and a certain grouping of different stocks. I did it again. I tell you, it just keeps it, when it pages down, it really flies on me. The power to determine the trend of the market is due to my knowledge of the characteristics of each individual stock and a certain grouping of different stocks under their proper rates of vibration. Stocks are like electrons, atoms, and molecules which hold persistently to their own individuality in response to the fundamental law of vibration. Science teaches that an original impulse of any kind finally resolves itself into a periodic or rhythmic motion. Also, just as a pendulum returns against its swing, just as a moon returns in its orbit, just as the advancing year over brings the rose of spring, so do the properties of the elements periodically recur as the weight of the atoms rises. Now, there's a lot of information in there, and you can be going, what the bleep is he really talking about? What's he getting at? Okay, basically what he's saying is that markets rise and fall according to strict laws that are understood through a certain type of mathematics. Okay. From my extensive investigations, studies, and applied tests, I find that not only do the various stocks vibrate, but those that driving forces controlling the stocks are also in a state of vibration. These vibratory forces can only be known by movements that generate on the stocks and their values in the market. Since all great swings or movements of the market are cyclic, they act in accordance with periodic law. Science has laid down the principle that the properties of an element are a periodic function of its atomic weight. Here, this is more, getting into some pretty, what we'll call hardcore stuff here. A famous scientist has stated that we are brought to the conviction that diversity in phenomenal nature in its different kingdoms is most intimately associated with numerical relationship. Again, all that boils down to is it's all about numbers. Numbers work in a certain way. The numbers are not intermixed accidentally, but are subject to regular periodicity. The changes and developments are seen in many cases as somewhat odd. Thus, I affirm every class of phenomena, which is whether in nature or the stock market, must be subject to universal law or causation and harmony. Every effect must have an adequate cause. If we wish to avert failure in speculation, we must deal with causes. Everything in existence is based on exact proportion, very important word there, and perfect relationship. There is no chance in nature because mathematical principles of the highest order lie at the foundation of all things. Faraday said there is nothing in the universe but mathematical points of force. Vibration is fundamental. Nothing is exempt from this law. It is universal, therefore applicable to every class of phenomena on the globe. Through the law of vibration, every stock in the market moves in its own distinctive sphere of activities, also to intensity, volume, and direction. All the essential qualities of its evolution are characterized in its own rate of vibration. Stocks, like atoms, are really centers of energy. Therefore, they are controlled mathematics. See, there again, you got all this hardcore stuff, and it goes back to they're all controlled by simple mathematics. Stocks create their own field of action and power to attract and repel, which principle explains why certain stocks at times lead the market and turns dead at other times. Thus, to speculate scientifically, it is absolutely necessary to follow natural law. Okay, if we can go back up here and grab this, I'll put it back on the screen. After years of patient study, I have proven my entire satisfaction, as well as demonstrated to others, that that vibration explains every possible phase and condition of the market. Okay, now this is where the newspaper starts talking again. In order to substantiate Mr. W.d. Gann's claims as to what he has been able to do under his method, we called upon Mr. William E. Guiley, an inspector of imports, 16 Beaver Street, New York. Mr. Guiley is well known in the downtown district. He himself has studied stock market movements for 25 years, during which time he has examined every piece of market literature that has been issued and procurable on Wall Street. It was he who encouraged Mr. Gann to study the scientific and mathematical possibilities of the subject. When asked what had been the most impressive of Mr. Gann's work and predictions, he replied as follows. It is very difficult for me to remember all the predictions and operations of W.d. Gann, which may be classified as phenomenal, but the following are a few. In 1908, when Union Pacific was at 168 and 1/8, he told me it would not touch 169 before it had a good break. We sold it short all the way down to 152 and 5/8, covering on the weak spots and putting it out again on the rallies, securing 23 points profit out of an 18-point market move. Now, if you look at that, what's going on is these points in time. These points in time create your highs and lows. So on that day, not only did Union Pacific run into resistance at 168 and 1/8, okay, that would have been price resistance. The time cycle, there was a pivot in the time cycle on that date, okay, meaning that all your highs and lows, all those are pivots of your time cycle. So on that date, and it doesn't give the date here, but on that date, not only did price come up against resistance, and this is the key, is that the time component flipped from going up to going down. It pivoted high. Okay? Well, once you understand those concepts, this happens all day. Okay? Let's go on, and we'll develop this concept a little bit more. What I'm saying, basically, is that each specific high or low is part of a time cycle, and these time cycles have within them the inherent characteristics of their prices mathematically related at certain points. Okay? Meaning every point, every high and low that comes in is a function of time. And depending on that, the repeat of that, the history of that point, okay, as to how it repeats. He came to me when the United States steel was selling around 50 and said the steel will run to 58, but it will not sell at 59. From there, it would break 16 points. We sold it short around 58 with a stop at 59. The highest it went was 58. From there, it declined to 41, which, of course, is 17 points. Again, these time cycles, he knew where the points were in the time cycle. So then he went in and he figured a high at this price and a low at this price. Now, you take out the time cycle and try to use something like geometry or Fibonacci to get those points. It's impossible. That won't work. And that's how come so many fail in this field. You have to go after W.d. Gann's time cycles. You have to get that understanding down first. At another time, wheat was selling at about 89 cents. Gann predicted that the May option would sell at $1.35. We bought it we bought it and made large profits on the way up. It actually touched 135. Union Pacific was 172. He said it would go to 184 and 7/8, but not an eighth higher until it had a good break. It went to 184 and 7/8 and came back from there 8 or 9 times. He sold it short repeatedly with a stop at 185 and were never caught. It eventually came back to 17. So what that it eventually came back to 17, even though this is directly from that interview. He probably meant it came back to 170, is what I'm thinking. But what happened here is it had price resistance. The time component was out, so it wasn't going to go up. Okay? And it kept coming back to that point because that's where price resistance was at. Okay? How do you know where price resistance is? It's a function of time. Okay? Mr. Gann's calculations are based on natural law. I have followed Gann and his work closely for years. I know that he has a firm grasp of the basic principles which govern stock market movements, and I do not believe any other man can duplicate the idea or his method at this present time. Now, see, Judah Toro was dead at this point, but Judah Toro could trade better than w.d.gann. Earlier this year, he figured that the top of the advance would fall on a certain day in August. Okay, note a date, aka time, and calculated the prices at which the Dow Jones Industrial Averages would then stand. Okay, now look, he's telling you that right there. It's right there. Okay, first you get the date, and then from that time cycle, from understanding that date, you get the prices. Okay, and this, you can do it on any high or low in the market. The market culminated on the exact day and within 0.4% of the figures predicted. You and w.d.gann must have cleaned up considerable money on those operations, he was suggested. Yes, we had made a great deal of money. Gann has taken $500,000 out of the market in the past few years. I once saw him take 130, and in the less than 1 month run it up to over 12,000. Okay? Gann can compound money faster than any man I've ever met. One of the most astonishing calculations Mr. Gann was during the summer of 1909 when he predicted that September wheat would sell at 120. This meant that it must touch that figure before the end of the month of September. At 12 o'clock Chicago time on September 30th, which is the last day, the option was selling below $1.08, and it looked as though his prediction would not be fulfilled. Mr. Gann said, if it does not touch 120 by the close in the market, it will prove that there is something wrong with my whole method of calculation. I do not care what the price is now. It must go there. It is common history that September wheat surprised the whole country by selling at $1.20 and no higher in the very last hour of trading, closing at that figure. Okay? So much for what w.d.gann has said and done as evidenced by himself and others. Now as to what demonstrations have taken place before our representative. Okay, now that was Mr. Guiley. Okay, we're done with him, and we're going to go to the actual representative for this magazine and what he was allowed to observe. Now, Gann did not know that this was going to be published. That his trading in this October 1909, which was a 1-month period, he did not know it was going to be published. That says a lot. Now let's continue on. During the month of October 1909, in 25 market days, w.d.gann made, in the presence of our representative, 286 transactions in various stocks on both the long and short side of the market. 264 of those transactions resulted in profits, 22 in losses. Folks, that is a 92.7% accuracy rate. The capital which he operated was doubled 10 times, so that at the end of the month he had 1,000% of his original margin. In our presence, Mr. William D. Gann sold steel common short at 94 7/8, saying that it would not go to 95. It did not. On a drive, which occurred during the week ending October 29, Mr. Gann bought U.S. Steel common stock at 86 and 1/4, saying that it would not go to 86. The lowest it sold was 86 and 1/3. We have seen Gann give in one day 16 consecutive orders in the same stock, 8 of which turned out to be at either the top or the bottom eighth of that particular swing. The above we can positively verify. Now, what was occurring there, if you remember from what we read earlier, when he says it works on a daily, hourly, well, it also works with minutes. So the law of vibration allows you to zoom in to these smaller time frames. Such performances as these, coupled with the foregoing, are probably unparalleled in the history of the street. James R. Keown has said the man who is right 6 out of 10 times will make a fortune. Gann is a trader who, without any attempt to make a showing, for he did not know the results were to be published, established a record of over 92% profitable trades. Mr. W.D. Gann has refused to disclose his method at any price, but to those scientifically inclined, he has unquestionably added to the stock of Wall Street knowledge and pointed out infinite possibilities. We have requested Mr. Gann to figure out for the readers of the ticker a few of the most striking indications which appear in his calculations. In presenting these, we wish to understand that no man, in or out of Wall Street, is infallible. W.D. Gann figures at present indicate that the trend of the stock market should, barring the usual rallies, be toward the lower prices until March or April of 1910. It was. He calculated that May wheat, which is now selling at 102, should not sell below 99 and should sell at $1.45 next spring. On cotton, which is now at about 15-cent level, he establishes that after a good reaction from these prices, the commodity should reach 18 cents in the spring of 1910. He looks for a corner in the March or May option. Whether these figures prove correct or not, it will in no way detract from the record which W.D. Gann has already established. William Delbert Gann was born in Lufkin, Texas, and is 31 years of age. He is a gifted mathematician, has an extraordinary memory of figures, and is an important tape reader. Take away his science, and he would beat the market on his intuitive tape reading alone. Endowed as he is with such qualities, we have no hesitation in predicting that within a comparatively few years, William D. Gann will receive recognition as one of Wall Street's leading operators. Note, since the market forecast was made, coffee has suffered the unexpected decline, the extreme break having been 120 points. The lowest on May wheat thus far has been 101 and 5/8, is now selling at 106 and 1/4. Now that concludes our ticker interview, but I want to bring out and highlight a couple of points for you. Number one is he said in 1909 that his techniques were not available at any price. Later, in 1927, he wrote a book called The Tunnel Through the Air. His systems are in that book. It requires research and study, but I can tell you, I have personally, meaning me, seen individuals being able to replicate his trading. In all of those cases, all of them, where I could observe that they were replicating what he was doing, in all the cases, they point to the book Tunnel Through the Air as where they learned it from, as where his systems are. Once again, that's the book, The Tunnel Through the Air. And like I said, it takes time and it takes research and study, but doesn't anything that's worthwhile in life take those exact same things? Okay, hey, this is BA. Have yourself a great day. Bye-bye.